Well, what we're going to do here is just take a look at the way in which the government in the near future is going to manage the economy in regards to interest rates. And of course, the Reserve Bank is going to next week come in. And so I'm going to bring in here Warren Hogan. Warren, many thanks for your time. I just want to take you on to that decision by the Reserve Bank. We saw Michelle Bullock today. She was before the the Senate Economics Committee, talking about this. Just give me your own sense as to where the Reserve Bank now sits.
Look, I think they're getting close to being in a pretty neutral position. That is not a strong inclination to do anything. There may be room for another cut in their mind, but the key message to come out of today's appearance and the prepared statement by the governor was, first of all, that there's a lot of uncertainty out there and that can go either way. That is a stronger economy or a weaker economy, higher inflation, lower inflation. And the more important one was that they said that while inflation is now back at their target, their job, given how much inflation we've had in the last 3 years, their job is to keep it there. Yeah. That's quite a strong signal that rate cuts are going to be harder to come by in the future, because they have got this interest rate down to a level they think is broadly neutral to the economy. But of course, the last thing they want to see is inflation pick up again. And with that uncertainty, they're not sure what's next. Well,
let's just pick up a little of Michelle Bullock today. She did speak, as you say, about this. And this is this whole issue that, yes, the number is down, but the stress caused by the higher prices from that inflation still remains. Let's go to Michelle Bullock speaking in that Senate Economics Committee today.
While inflation has fallen materially, the price level is not coming back down. The higher price level has affected everyone, whether you're paying a mortgage, renting, running a business, or just trying to make ends meet. And it's been especially tough on people with lower incomes and those in more vulnerable situations.
Yes, so Warren, it's interesting there, isn't it? Because yes, the inflation number is down, but the stress is still there for some households, the so-called cost of living. So yes, inflation might be disappeared, but the problems of it are not gone.
No, not at all. And the big one there is that, unlike, say, in the 1970s or 80s when we last had inflation, wages haven't kept pace. Yes. So we're seeing a material decline in the overall level of people's living standards, real wages, income. And that means that stress in the system, whether it's household stress in terms of their finances, or, of course, if there's a lift in the economy and there's demand for workers, the ability and the desire of people to ask for higher wages, which itself is inflationary, is sitting in the background. So there's some pretty strong messages coming out of this.
So one thing, if there's still stress, isn't that an argument for an interest rate cut or for more interest rate cuts to try and take pressure off the household sector? We can see, though, that there are issues where some spending is starting to rise, some discretionary spending starting to rise. So that's all good signs. But I'm just wondering if that stress is still existing. Isn't that an argument, technically, for the rates to be cut?
Well, it is, and I think that's why the governor's talking about this uncertainty, because if we see households get to a point where they actually stop spending again, and we saw that in Q1, I think it was election-related, it was market volatility-related, but the RBA would definitely be looking at what that means for growth and potentially cutting rates. But if people keep spending and they've got jobs and job security and their confidence is up, we know house prices are going up, and they start spending, businesses might be able to start passing that prices on, that price pressure on, of course, and workers will start asking for higher wages. Yes. So this is the uncertainty. And there's a problem because the wages, and if they start to rise significantly more than the underlying inflation, well, it's a cost.
That becomes inflationary in itself.
Exactly right. And what all of that means is that we might have got measured inflation down into the target band, admittedly only just, it's at the top of the target band, but there's still this pressure in the system, whether it's through business costs or the fact that workers are actually looking to make good on the fall in their incomes over the last couple of years. So there's no way you can rule or say this inflation's behind us. And only way that you'd be confident of that is if the economy is in trouble. It's not in trouble. It's not in trouble,
that's the issue.
Yeah, and look, it's early days on this recovery.
So one small thing is if, say, for example, there is some global downturn, triggered by America, triggered by Europe, triggered by whatever, the question about the shape that Australia is in to cope with that downturn right now, we're not in as good a shape as we were going into, say, the pandemic. We're not as good a shape as we went into going into the global financial crisis. The question is just what the outcomes will then be.
Yeah, and there's a couple of dimensions. One is, that household sector, if it is a bit more pressured, do they pull back more aggressively than they otherwise would be? And of course, the other thing is the government. The government, its financial position is not as good, so its ability to throw money at the economy. And then, of course, it could end up being inflationary without any growth, which is stagflation. So, that's the uncertain environment, which is the strongest message the governor's given today. But the other one is, sure, we may be able to cut again in November, but, there's no guarantees beyond that. I think it's a very neutral outlook for interest rates.
So what's interesting. Always good to have you in the program, Warren. Many thanks for your time today.
Thanks, Ross.